Joining me now to break down the state of the tech rally and the AI trade is Sylvia Jablonski of Defiance ETFs. Sylvia, thanks so much for joining us.
Thank you so much for having me. Glad to be here.
Before we dig into tech, Sylvia, let's kind of start broad. How are you looking at this market right now as we head into year end?
Yeah, this market's been, pretty impressive and pretty interesting, right? So we have double-digit growth so far this year. We saw some volatility and choppiness this month, around the government shutdown, and perhaps not having access to data and knowing what the Fed will do and uncertainty around tariffs. And so it's interesting because the reset that we usually expect to see in September and October came to us in November. But that being said, I think it's been a dip buying market. You have 80% of the names beating on the top and bottom line with earnings. You have 11.5% growth in earnings. So these corporations are spending, they're holding up well. Where you've seen falters, the earnings announcements have actually been pretty good. It's just that we've come to expect this level of perfection in terms of analyst expectations and beats or meets and things like this. But I think overall we have a strong market, and I think the next leg up comes from the government actually reopening.
Okay, so November is historically a strong month of the year, followed by December with the Santa Claus rally. Do you think we're setting ourselves up for a market that's going to continue to power higher into year end?
I do. I think, the market was just kind of rallying, particularly around all the tech stocks and AI names and things like this. And, corrections are healthy and corrections are buying opportunities. And so what we've seen is that actually when the market has pulled back over the last couple of days, we've seen investors come in and scoop up a lot of those purchases. And, if you look at the S&P returns over just the last handful, 3-4 years, we're talking about getting close to 80% here. And so when you have a year that starts like this, up 15 to 17% or so at this stage, we usually tend to see another 3 to 5% by the end of the year. So I would think that the Santa Claus rally will come. But if not, I don't expect at least a big correction from where we're at.
Okay, and then what about in terms of the tech rally specifically? Does it still have room to run? Where are we in that cycle?
I think that the tech cycle and the tech boom and performance has room to run as long as AI continues to grow and run. So, if you listen to all of the earnings calls this time around, you continue to hear that there's spending going into AI, that there are efficiencies that have been created by AI, that AI is impacting, cost savings and, helping strategize in terms of like robotics and factories and things like this, supply chains. And so I think that as long as that keeps on developing and growing out, you need all of these tech companies to participate in that. And I think that this is going to be the generation of AI and AI, quantum computing, AI power. All of that stuff is just got a lot of room to run as long as spending continues in this space.
Is it time to look beyond the Mag 7 though? And if so, which Mag 7 names are you most bullish on and which would you kind of leave behind?
Yeah, so I mean, I'm not really, in terms of Mag 7, I think that Mag 7 are just like great long-term buy and hold names to have in a portfolio. But given that we all have them in a portfolio, I do think it's worth looking outside of the box a little bit. And, it kind of depends, right? Like if you have a highly concentrated tech, high growth portfolio, it's not a bad idea to look at like an X Mag, which takes out the Mag 7 and gives you the broadened S&P exposure. But, if you really want to capitalize on the future, I think AI power and infrastructure is really the future. So maybe instead of, hang on to your NVIDIA, your AMD and things like this, but start looking at some of the different players that are out there, within the nuclear energy sector, within, just energy and efficiency around AI, the build outs of infrastructure, like AI power ETFs, things like that. That might be a good place to look to allocate.
Can you give us some specific names that you like that you think will lead the next wave beyond Mag 7?
Yeah, I mean, I can tell you that we've had a lot of success just with 2 of our recent launches. So AIPO is one of them. It's probably the fastest growing ETF that we've seen at Defiance. It's been out since July, and it's just had, a lot of interest in assets, because I think what investors think about is that, we have this AI phenomenon. Well, how are we going to power all of this, right? And so in order for this to grow, the infrastructure has to be there. It has to be built out. And so that's just been a great way to get exposure to that. We also like supercomputing, quantum computing, that next generation of high frequency computing. And I think that, Quantum is actually like a $3 billion ETF this year. Again, we've seen a lot of flow there off of the popularity in names like, IonZ, Rigetti, quantum computing company, D-Wave. There's just been so much interest in that space, and we've really seen investors flocking to those types of products.
Yeah, I'm curious because you've built your ETFs around some of the biggest tech and innovation themes. You mentioned quantum computing, AI infrastructure, XMEG 7, also defense tech. What's investor appetite like for thematic ETFs right now? Where are you seeing the greatest demand?
Yeah, so it's super interesting because I think that, we went through this period where thematic investing, we used to call it like smart beta, strategic beta. It was so popular for a period of time. And then there was just like this 5 or 6 year period where, we didn't see so much innovation in that space. And I think in the last couple of years, you really see a lot of innovation in this space. And it's everything from, some of the names that I mentioned that we have, whether it's like quantum computing, AI hyperscalers, AI connectivity, AI power, robotics. I think that a lot of these ETFs have come to market. And because this has been the theme of the year, the assets have poured into that. And you really see those flows represented there.
But for every Google, there was a Yahoo or an AOL. Yeah. So how do you separate those that have staying power and that will be winners from those that ultimately could be pretty risky to invest in?
Yeah, and that's why ETFs are great, right? So if you think about quantum computing, there are a handful of quantum computing companies, pure plays, that are on the path to profitability. They're starting to have positive earnings calls. It really looks like they have a solid business infrastructure behind them. And then there are companies that are kind of smaller, pure play companies that haven't actually, kind of done anything yet. And so I think when you get an ETF, you think about quantum, like who are the biggest players in quantum? Well, they might be companies like IBM and Oracle that are, leading the charge. We heard about HSBC using quantum computing to better bond pricing efficiently recently, right? And it's companies like IBM and Oracle that are partnering with these types of banks. And so you want those names in a basket, and then you also want the smaller, like quantum computing company, D-Wave company, and I think if on the smaller cap, like to your point, if some of the smaller cap companies don't make it, perhaps they become an M&A target, or perhaps they fall out of the index, but your portfolio performance doesn't suffer because you have the ballast of the large cap names in there.
Okay, so just finally to wrap things up, what's your best advice to investors who want tech exposure but are concerned about stretched valuations?
Yeah, I think that, keep an eye on earnings, right? Because some of these companies are actually justifying their earnings and their outlook. And look, every single innovation has played out this way, where at some point, a Palantir and NVIDIA, have been argued to be overvalued, and then they take that next leg up and move up another 100% over time. So, buy on the dips, and I think buy quality companies that are participating in what is right now, and what is right now is pretty much AI powered infrastructure.
Sylvia Jablonski, Chief Investment Officer of Defiance ETFs. Always a pleasure chatting with you. Thank you so much for your picks and your insights.
Thank you.